So yeah, when it comes to bullish and bearish continuation, let me clean this. Let me clean this, okay? Let me clean this so I can say what I want to say just briefly. So that's when it comes to bearish trend continuation, just vice versa of the bullish trend continuation. Just like this, we have, let's say here, okay, lower low like this, lower high. I'm sorry, let me clean this. Let me see again. So we have the lower low like this, we have the lower high, we have the lower low, okay, yeah, we have the lower high, we have the lower low. So yeah, you can see the series of break of structures, right? You can see the series of break of structures to the downside. You can see. So when price goes down, we have a low. When price goes up, we have a low high. When price goes down, we have the lower low. When price retrace, before just kind of retrace before you continue the movement, because it is called a low high. We can call it our swing high, okay? You can see. Let me draw it down. Okay, you can see we have a lower high here and a lower low. You can see series of break of structures. So let's just map out our supply zone. So when price is going down, okay, what we'll map out is our supply zone, so that we'll wait for price to retest our supply zone so we can sell down, okay? So you can see, okay, okay. So normally, okay, I'm meant to draw it. Okay, let me leave it like this. I just know you understand what I'm saying. So this place are my, so here are my supply zone, okay? This place I just mapped out are my supply zone. So the ones inside are my minor supply zone. This way stop loss and pending orders are waiting to be executed, okay? So normally sometimes people will just expect price to just tap into this one, and price will just come here and start going down, okay? But sometimes when price want to make a deep retracement, this is actually good though. When price is just maybe in the lower time frame, when price is just forming a series of lower low, lower high, you can just tap in. But if price is making a deep retracement, you can just go into your 4 hours time frame, a high time frame, okay? Because sometimes if you are waiting for price to come here and go down, sometimes price liquidate it and you get liquidated in the market, okay? So price will come into the third one, you put your stop loss above here, price will now come, you're hoping that price will tap into the zone and take it down, but it didn't happen, okay? So price has to touch the highest, which is this one, okay, which is the major supply zone here, okay? Wait, yeah, which is the major supply zone, okay, which is this one here. So just wait for price to tap into it. So because this is where the impulsive movement to the downside, okay? So you put your stop loss above here, okay, and you are waiting for market to tap in here, so you go down like this, okay? Because this is where the external liquidity, okay? So sometimes people go into the 15 minutes time frame. This is what I'll tell you, okay? Let me tell you this thing, because assuming this is a 4 hours analysis, okay? This is a 4 hours analysis. Assuming I'm waiting for price to come into this my major supply zone, so that price will move down. What I'll also do is that I'll go to the 15 minutes time frame. That is the entry confirmation chart, okay? So let me click this thing here. I'll show you something. So let's take for example, let me clean it all. So let's take for example, okay, we have it like this and like this. So let's take for instance, let me draw my line. Okay, this is the last one here. So as you can see now, if price goes, I'll liquidate all these minor supplies and tap into here. What I'll do, I'm tapping into here. I'm hoping that price have hit the external liquidity. I'm hoping that price will sell down once it touches my major supply zone. Okay, if I'm buying normally, vice versa, where I'll be mapping out is my demand. But if I'm selling, I'll be mapping out my supply, which is on top, because on top is the highest place price is, the highest place price is, and waiting for price to fall down. Okay, maybe you bought at when the price when the price like goes up, okay, at the highest price you now sell down. Okay, so you make your profit. Okay, that is it. So that's what I'm saying. So I'm hoping that price will go down. What I'll do, I'll go to the 15 minutes time frame. I'm assuming now here it's now in a 15 minutes time frame. Okay, here is now in a 15 minutes time frame. The entry chart, the entry confirmation. Okay, I use 15 minutes to enter my trade. So what I'll do is that if price hits my major supply, I'll wait for price to like form what, because if it's coming up like this in 15 minutes time frame, what it is doing is something like this. Assuming price is going up like this to touch my supply, so what it's doing in the 15 minutes time frame is something like this: higher high, higher low, higher high, higher low, higher high. So if price get to this point now, so I'm just kind of making it in this small place. I'll wait for a change of character, like the price breaking above the swing, the swing low like this, causing a change of character. And when price retrace, I will shoot down. Do you understand? So what I'll do now is exactly this thing that is here in the 15 minutes time frame. What I'll do, that I'll wait for price to form a change of character in this my supply zone now. Assuming price is going up now, I'll wait for price to do this, then comes like this and we test again in my 15 minutes time frame. And I'll wait for price, I'll wait for price to retest. Assuming price was doing this, let me do it in a logical way. Anyway, let me do it like this. Price will come like this and hit down. Okay, so let me give you an example of what I mean. Now I'm waiting for price to tap into my major supply zone on this. Let me clean this place. Assuming this is my this is my 15 minutes time frame. Okay, and this is my 4 hours time frame, which is the major the time frame I'm using to analyze. Okay, I'm waiting for price to touch my major supply, which is this one here. So I'll go to my 15 minutes time frame. I would like to be seeing something like this: higher high, higher low, higher high, higher low, higher high, to price tap into my major supply zone. What I'll be looking, I'll go to 15 minutes time frame, because in 15 minutes time frame it will look like this. Maybe in 1 hour time, 4 hours time frame, it is like this in a 4 hours time frame. But if you go to a smaller time frame, you'll be seeing something like this: higher high, higher low, higher high, higher low, higher high. Do you understand? So that is why I'm using this thing. I'm just giving you some examples. Okay, if you don't understand, I'll repeat it again. So I'm waiting for price here. Price tapping to this place with the sense of high high, high low, high high, high low. So if I want to sell, assuming this is a 15 minutes time frame now, what I'll do, I'll wait for price to form a break or a change of character like this. Okay, closing below this swing and this swing low, price will now retrace back. Okay, and I'll shoot down. Okay, this is the mechanism. This is how it is being done. What I'm talking about. Let me clean this thing again. Let me make sure that you understand. So what I'm talking about is how my entry model. Okay, so assuming that price in 4 hours time frame, price is going like price went from here to here. Do you understand? It means that in 15 minutes, if I go to an entry model, not when you want to analyze, you analyze in 4 hour time frame. But once you want to enter a position, you enter in a lower time frame, which is 15 minutes or 5 minutes. But me, I use 15 minutes now. So if price goes from here to here now, in a 4 hours time frame, I assume price just made a single or 2 or 3 single move like this up. In 15 minutes time frame, okay, where candle is 115 minutes, price might be like this as it's going up here, as it just went up here like this in 4 hours time frame. In 15 minutes, price will be like kind of like this, higher high, like this, higher low, higher high. Sorry, this is rough. Okay, higher low, higher high, higher low, higher high. Do you see the difference? That is it. If you go to the 15 minutes time frame, you will not have a clearer vision of where to enter. Do you understand? So this is what I want to tell you. This is just how this 4 hours time frame. Okay, 4 hours. Okay, here is 15 minutes. How the candle look like in 15 minutes when you break it down in a simpler unit. So that is what I'm trying to explain for you here. Where price is going down, this is I'm giving an example of a bearish when price is going down, a bearish continuous trend. Okay, assuming price was forming a series of lower low like this. Okay, yeah, I think yeah, price is going down, lower low like this, lower low, lower high, or swing high. Okay, then lower low, lower high, lower low. I hope you can see this clearly, Harry. So you can see it. Okay, let me do another one here. Let me do it like this. Okay, lower lower high like that, and then lower low. Okay, you understand? So you can see the demand here, the supply. Sorry, when you're selling, sorry, let me close this thing. When you're selling, you won't part your supply zone, Abby. She understands. So you can see our supply. So you can see our supply zone here. So now this is 4 hours time frame. So price repeated all this internal supply zone, this minor supply zone, and went up here. Remember what I told you? If price make a move like this, touching the external, the major supply zone, so I'm hoping to sell down. Okay, price have touched my external liquidity. I'm hoping to sell down. So in 15 minutes, as this candle move like this, remember what I told you? In 15 minutes, it will giving us like this candle went up from here to here now. In 15 minutes, it will be looking like this. Chart will be looking like this. For that one move like that went up, price will be moving like this. Do you understand? So what I want to see for price in a 15 minutes time frame, for price to form a break of structure, a change of character to the downside like this, breaking the causing a change of character in a smaller time frame. Okay, then price going up. I don't know whether I'm getting it correct. I'm pushing down. Do you understand? So let's assume now that this place now look like this. Like this place now, from here, the candle from here to here in a 15 minutes time frame look like this. Okay, let's say look at this. Higher high, higher low, high high, high low, higher high. So I'm waiting for price. When price got to this place, I'm using the 15 minutes time frame here to demonstrate. I wanted for price to break down like this. Okay, forming a change of character, then retracing back, then and go down. This is what I want to explain here. This is what I'm trying to explain here in a smaller time frame. I'm not making myself clear. This is what I want to explain here. So that means that the candle, that means that the candle that went from here to here, that means it's in a 15 minutes time frame. I'm waiting for it. Let me clear this place. Do you understand? Let me clear it. Let me show you in a 15 minutes time for what I want it to look like. So in the 15 minutes time for what I want it to look like. Okay, let's say like this. Let's say a series of higher high, higher low, higher high, higher low, higher high. This is rough. Let me clean it. Okay. Let me clean it. Okay. So what I want to see is something like this. Okay. Higher high. Okay. Higher low. Higher high. Okay. Higher low. Higher high. To hit my major demand, major supply. Okay, here. So this is just how it look in a 15 minutes time frame, like I explained earlier. So I want price to come and take out this higher low like this. Okay, then trace back, okay, to the other block. That is in a lower time frame for entry model. If it enters into this other block that causes this impulsive move to the downside, causing a break of structure like this. If it enters it, shoot down, and I'll sell. This is the entry mode. I don't know whether you're seeing what is happening here clearly. Let me clean it again. Let me make sure you understand. Okay, so assuming like this. I want it like this. Okay, higher. This assuming it's a 15 minutes time frame. Okay, that's why I'm doing it like this. Okay, it's a lower time frame. Okay, I want higher high, higher low, higher high, higher low, higher high. You can see. So I want price to come and break down this swing low. Okay, this high low like this. I'm making myself clear. Causing a change of character, that is chalk. So price retracing back. This is my entry model in the 15 minutes time frame. I won't just wait for price to come like this. Just go like this, and get here, and I will sell down. No, sometimes price can disappoint you. To just sweep out that your supply and start going up. It will not even retrace. It will not even do anything. It will just push you out from the market, and that is your loss. Do you understand? That is what I'm trying to make you understand. Okay, that's what I want to make you understand. Okay, so I'm waiting for price to come and break in a 15 minutes time. Come and break this swing low. Okay, price coming back to the other block that caused this change of character to the downside. I will now shoot down. That is the model. Okay, that is just how it is. Okay, you just shoot down, you make your money. That is how this is how to just enter the market. You don't just wait for price, just go like this. You get here now, you now shoot down. Okay, this is the secret I say I will draw for you. Okay, so you won't make mistake. After price liquidated all this small supply and got to the demand, the liquidated demand got to the external demand. Okay, the major demand. So what you do is go into a smaller time frame and see a change of character. Okay, and then price retracing back to that place. The candle that caused that change of character to the downside, price come back to that place again. To your it just look like price touching your your external supply 2 times, then you can enter and shoot that, but make sure that there was a change of character. Okay, in a lower time frame, then price retracing back, you will now put your stop loss above here. Okay, target to the downside. Okay, to clear all these liquidities, okay, to the downside. Okay, thank you.